Welcome back. This is Chili Davis, and I'm back to do another video. I want to welcome back all my subscribers and welcome to my new viewers. If you're new, please click the subscribe button. And also, if you like the content, please click the like button so that you can continue to get my frequent updates. Help me with the YouTube algorithm, get more subscribers and get more views, and I can keep delivering good content. So today I'm here to talk about my top stocks. It was a red day in the market. We do see that the Robinhood portfolio was down 2% on the day, but we did have a few bright spots. We had ticker symbol CRWD or CrowdStrike. The cybersecurity software company was up 2.37%. And we had Facebook, ticker symbol FB, up 0.51%. And main stock I wanted to talk about today that was up was SoFi. SoFi Technologies was up 18.49%. I did a video earlier today, but this was before the market turned really red. So SoFi was up 18% on the day. SoFi was up over 18% at some point today based on the fact that they got their bank charter. So SoFi rises after regulators approved U.S. bank charter. Now, the only caveat that they have was SoFi cannot go into like cryptocurrencies, but they were conditionally approved to become a bank. So that is great news. The stock can take off from here. If we look at tip ranks and we look at SoFi, we know that SoFi's average price target is right around $22. Here it is, SoFi technology stock forecast based on 10 Wall Street analysts. 12-month price target for SoFi Technology. The average price target is $21.40 and a high of $30 forecasted for the SoFi stock, which right now is trading about $15, $14 and some change. And they just got approved for the bank charter. So the good news is SoFi has been here before. And we look at the stock, it did back in November reach $22, and then it's been cratering since. Now, part of this reason is two things. SoFi has not been getting money for student loans. SoFi is a lending company. One of their major products, which was student loan refinance, because the Biden administration had all student loans on pause, they weren't able to count that revenue for the quarters, for the last couple of quarters. Now, the other part that they had slowing them down was they weren't officially a bank. Many of these FinTech companies like Square and PayPal, they're not banks, but officially SoFi is conditionally a bank moving forward. So SoFi is looking to add members and make more loans. They do everything. They do student loans, they do credit cards, they do auto loans. And so with Anthony Noto, CEO, I believe he can get this stock back up to $22 per share. Right now, I believe the stock is undervalued at $13.71. I think a lot of that changes now, that it will recover that price of $22 per share once they talk about the numbers during the quarter, and they also get student loans back. So right now, the stock, I believe, is highly undervalued. And for the last couple of weeks, people have been able to just buy. And the stock was also getting shorted by the hedge funds and putting pressure on the stock. One of the things you have to understand about stock market is created by two groups of people, buyers and sellers. And you have one group of sellers, basically the shorts, that keep shorting the stock, putting pressure on the stock. And these basically hedge funds would not stop putting pressure on the stock until they actually had evidence that the stock could move forward. So with that information, that they got the bank charter, at least conditionally approved, the stock took off yesterday. The stock spiked up from $12 up to $14. So right now, I believe SoFi will be in an upturn. in the uptrend, as long as they continue to demonstrate good numbers. Also with the bank charter, they will be able to get more customers. So two things happening: the bank charter and student loans return. This stock will easily recover back to the $22 per share mark. Okay, so this is SoFi Technologies. Again, the stock was up on the day over 13% on the day. And again, between yesterday and today, it was up, 18%. Yesterday, late after hours, they're up 6%. And then going in today, they were up 12%. So great news for SoFi. They got the bank charter, and that made my portfolio go up. Now, on the other hand, the stock market right now is dumping stocks that don't have real price earnings. So if a company is based off has high projections, like a Tesla or like a FinTech like Upstart or Affirm, where projections are out based off of potential sales, the stock will go down right now because they don't have actual price per earnings per share, like actual products they're selling and actual earnings per share they're making. So right now, Wall Street is making all those type of stocks pay for it. As you can see, the Dow Jones was down, the S&P 500 was down, which a lot of the top S&P 500 companies are tech companies. So they were down today. Nasdaq was down. Your Russel 2000 stocks were down. So this is Wall Street preparing itself. It's better to get the fluff out of the market before they raise interest rates. So that's what's happening right now. A lot of the stocks that were up in 2020 and 2021 are being shrank during this particular type of market. In this environment, stocks that don't have actually priced based off price for earnings per share off this current quarter or the previous quarter, they're going to get tanked. So right now, we're waiting for the bottom. We don't know where the bottom is, but right now, there's a few stocks holding up. You have like an Apple. Apple is still holding up. They're only down 5% over the last week versus like a Affirm. So we look at Affirm stock, which is based off of future sales. If you look at Affirm over the last month, they're down 33%. So the Wall Street is not playing. They're downgrading a lot of these high tech companies, which in 2020 and 2021 were great, but in this market, they're not going to work. So you're better off sticking with stocks that pay dividends. Stocks like Ford. Ford over the last month has been up over 15%. You're also better with stocks like banks. Banks don't go down. So like, for example, let's just use Bank of America. Bank of America is only down over the last month. Well, over the last 6 months, they're not down. So, but, you're better off with stocks that are stable and robust to handle their repricing of a lot of stocks right now. So again, you want to look at banks, you want to look at even oil or energy stocks, COP, which is ConocoPhillips. If we look at them over the last month, they've been up. If you look at the last 6 months, they've been up. So these are the stocks that actually have revenue and based off price per earnings per share that have current revenue that are good in this type of market. Also, you could take a look at stock DE manufacturing. Again, these are the type of stocks you want to look at. Deere company. If we look at the last month, they've been up 11%. The last 6 months, fairly up 8%. But the thing that they have that keeps these stocks from just drastically falling, that's different from a tech that's based off future earnings, is they pay a dividend. That tells you a stock is very stable. So right now, in this current context, not to say that 6 months later, 8 months later, we can go into a different environment. But right now, the stocks that are based off of future earnings and future revenue are getting body slammed. So that's my tip on the day. Just wanted to let you know there are some good stocks out there. So keep your eye out on Deere, ConocoPhillips, and Bank of America. These type of stocks will be resilient in the current environment of the market. Okay. So again, going to my other portfolio, I was down again, 1.86%, a little over $1,000. My top stock still was SoFi Technologies, up 18%, made a little over $144. Second stock that was up was MoneyGram. MoneyGram, I was up 5.37%. Also, ticker symbol Microsoft or MSFT. Microsoft was up 0.47%. Also, keep your eye on Microsoft. I told you earlier in the week, Microsoft just acquired Activision. With that news, Activision spiked up over 20%. Microsoft, let's take a look. Ticker symbol Microsoft is definitely undervalued. If we look at the 52-week high of Microsoft, it is $349, and its 52-week low of $216. So there's almost a $50 profit in there once Microsoft returns back to its high. Again, even if it returns back to $325 based off of its acquisitions, here it is, Microsoft making a bullish move to buy Activision as tech investors run for the cover. Now, here's the thing. Microsoft is one of the almost trillion-dollar companies. If they can handle the storm. Right now, companies like Microsoft can handle the storm. So if you want to buy some tech, Microsoft, Apple, Google, those are the top 3 tech companies you want to buy. Right now, you can't mess with the FinTechs, the stocks there, Russel 2000s, these type of stocks are very dangerous to get into. I'll just give you an example. Another stock that is tech, but has gotten body slammed in the last month or so. Here it is, Palantir Technologies is down over 20% in the last month. So right now you want to stay out of those type of high flying tech companies. The only ones you can get into right now and be safe is an Apple, Microsoft. Those are safe technology companies to be in. But anything too new, like a Palantir Technology, is going to get hit in this current environment. So that was my update for today. Again, the top stock was SoFi Technologies, and they were up 18% based on the news that they got their bank charter conditionally approved, of course. They got a bank charter, so all those loans they can make now officially, they don't have to outsource those loans to anyone else, or they don't have to do a strategic partnership. They will actually be making the loans themselves. Also, I'm a consumer of SoFi. I also have some of my student loans with SoFi. So I'm both invested in SoFi. I'm also on the consumer side. So as an investor in SoFi Technology and as a customer of SoFi Technologies, I'm pretty happy. Okay, so SoFi Technologies top stock today was up over 18%. And again, keep your eye on other stocks. Like I said, your Apples, your Microsoft, these type of stocks you want to be in. Bank of America, bank stocks, doesn't necessarily have to be Bank of America, but bank type of stocks is what you want to be in this type of market. So I want to thank you for watching. Thank you for listening. Please like, share, and we'll see you on the next video.